There is a building on the corner of almost every street in America. You walk past it without thinking. Glass doors, an ATM out front, a sign with a logo you have seen your entire life. You assume everyone who walks through those doors is treated the same way. Same rules, same service, same institution. They are not. The bank you walk into when you have nothing and the bank that exists when you have everything are not the same place. They share a name, a logo, and a physical address. Everything else, the attention, the rates, the access, the respect, changes completely depending on one number. Not your credit score, not your job title, not your education, your balance. This is what the bank actually does with you at every level. And some of what happens at the top will make everything at the bottom feel like a deliberate choice, because it is. Level 1. Negative balance. It started with $17. That was what you had when the automatic payment processed. The gym membership you forgot was still active. $9.99. Your balance was $17. The math should have worked. It did not. The bank processed a pending charge from 2 days earlier first, a charge that had not yet cleared, and suddenly, the order of transactions made you negative before the gym membership hit. The gym membership now overdrafted you. The fee arrives within the hour. $34 for being 11 cents short. You call. The automated system gives you 4 options, none of which is speak to a human being. You press 0 repeatedly until something breaks, and a voice answers. The voice is reading from a script written by someone whose job was to say no, while sounding sympathetic. The fee cannot be waived at this time. You ask what at this time means. The voice says you can submit a formal review request. You ask how long that takes. The voice says up to 15 business days. Your rent is due in 4. Another charge processes while you are on the phone. Another overdraft fee. Now you owe the bank $68 you do not have for transactions totaling less than $20 you did not plan for. The penalty for being broke is that you become more broke, not accidentally, by design. The bank collected $11.6 billion in overdraft fees last year. $11.6 billion extracted almost entirely from the people who could least afford to lose it. You are not a customer at a negative balance. You are a revenue source. Level 2. $500. You pulled yourself back. 3 weeks of packed lunches and declined invitations and checking the balance before every single purchase. $500. Positive, stable. The bank charges you a monthly maintenance fee of $12. The waiver requirement is a minimum daily balance of $1,500 or a qualifying direct deposit. You have neither. So $12 disappears every month with no notification, no explanation, just a line item in a statement you have learned to read like a damage report. You apply for a credit card to build your score. The bank offers you a secured card. You must deposit $300 of your own money as collateral. They will hold your money and lend it back to you at 23% interest. You are being charged to borrow what is already yours. You go to the branch to ask a question about the fee structure. The teller helps you efficiently. 40 seconds. No eye contact beyond what is professionally required. No recommendation, no offer of alternatives, no suggestion that anything could be different. She moves to the next customer before you have finished putting your wallet away. You were not treated badly. You were processed. And at $500, processed is the ceiling of what you can expect. What happens next as the balance climbs is not just better service. The actual cost of money changes. The rules change. The fees that seemed fixed and permanent begin to behave differently, as if they were never rules at all. Just defaults applied to people who did not know they could be negotiated. Level 3. $5,000. The maintenance fee disappears. Not because you asked. The direct deposit you set up 6 months ago finally crossed a threshold inside the bank's system, and the fee was automatically waived. The same charge that drained your account quietly for 2 years simply stopped existing one Tuesday morning without a single notification. A credit card offer arrives in the mail, a real one, no security deposit, a $2,000 limit, and a welcome bonus. The same institution that made you deposit your own money as collateral 8 months ago is now mailing you metallic envelopes with your name embossed on the front. You did not change. The number changed. The bank's behavior followed the number. You walk into the branch with a question about a wire transfer. The teller smiles before you reach the window, asks how she can help, resolves the issue in 3 minutes, and tells you to have a great day as you leave. It is a small thing, but you remember the 40-second transaction at $500 and you understand something important. The warmth was always available. It was just being rationed. Level 4, $20,000. A person calls you. Not a recording, not a survey. A person with a name who says he has been assigned as your relationship banker and would like to schedule 15 minutes to understand your financial goals. The institution that put you on hold for 40 minutes when you were negative is now initiating contact to ask what you need. The interest rate on your car loan drops a full percentage point from what you paid 2 years ago. The fee that appeared on your statement last month, $32, unclear origin, is reversed the same afternoon you email about it. No form, no phone tree, no escalation process. A reply that says, taken care of, and nothing else. You realize the fees were never fixed. They were negotiable. They were just never negotiated on your behalf when you could not afford for them to matter. If this is showing you the system in a way nobody explained before, hit that like button and subscribe. We put out content like this every single week. Share this with someone who needs to understand what they are actually inside. Now let us go to the levels most people never see. Level 5, $100,000. The branch experience changes physically. You are guided past the general waiting area into a separate space. Quieter, better furniture. Someone offers you coffee before you sit down. The conversation that follows is not transactional. It is a review. Your accounts, your goals, your timeline, your tax situation. The banker across from you knows your name before you introduce yourself. He knows your account history. He references a conversation from 4 months ago that you had half forgotten. The bank is not serving you at this level. The bank is retaining you. Every interaction is designed to make leaving feel like a loss. They have done the math. You are worth more maintained than replaced. Level 6, $1 million private banking. The phrase sounds like a variation of what came before. It is not. Private banking is a different institution wearing the same logo. Your private banker manages fewer than 30 relationships. Yours is one of them. He does not have a script. He has context, your estate structure, your investment philosophy, your family situation, your charitable intentions. All of it held continuously, without you needing to explain it each time you call. The interest rate on your mortgage was not published anywhere. It was negotiated in a single phone call. The investment opportunity presented to you last Thursday was not available to the public. It was offered to 17 people. You were one of them because of a relationship, not an application. You do not apply for things at $1 million. Things are brought to you before you think to ask for them. Level 7, $10 million. There is no counter, no waiting area, no branch. There is a dedicated team. 3 people inside the institution whose professional performance is partially measured by whether you stay. Losing your relationship would affect careers. The bank does not manage this risk through better service. It manages it through deeper integration. Your CFO and their senior partner speak regularly. Your estate attorney and their trust division have an established working relationship. The bank is not a vendor you use. The bank is infrastructure you operate inside. Deals arrive structured specifically for your participation. Investment minimums are modified because the relationship justifies the exception. The paperwork that takes a standard customer 3 weeks is handled in 48 hours because someone made a call to say whose account it was. You are not a customer at $10 million. You are an asset the institution has organized itself to protect. Right now, somewhere close to where you are reading this, someone is staring at a screen. There is a minus sign in front of their balance. It happened because of $17 and a processing order they did not understand and could not have predicted. The fee arrived within the hour. They are on hold with a voice reading from a script. The hold music loops. They do not know the fee is negotiable for someone with a different balance. They do not know the maintenance charge disappears at a threshold nobody told them existed. They do not know that 3 blocks away, in the same building with the same logo above the door, someone received a private investment opportunity over coffee this morning before the branch officially opened. Same bank, same name, same glass doors. Completely different institution depending on the number next to your name. The bank did not become cruel at the bottom. It became indifferent, and indifference applied with precision at scale. $34 fees multiplied across millions of accounts produces the same result as cruelty without requiring anyone to intend it. The bank is not broken. The bank is working exactly the way it was built to work. The only question is which side of the system you are on. And now you know exactly what each side looks like. Hit that like button, subscribe for more content like this every week, and share this with someone who banks without knowing how the bank actually sees them. Drop a comment below. Which level are you at right now? The gap between them is larger than most people are ever told.